All right, back to work we go. Hope you guys had a fantastic weekend, but it's time to get back to work. Got some money to make this final week of what has been a fantastic month of March. Monday evening, we're getting ready for a very big Tuesday trading session. We got some Fed speakers tomorrow. Everybody's still reacting to this bank collapse the last 2 weeks, and boy, do I have some great trades on my radar for Tuesday. I'm going to cover all my favorite trades in tonight's video to make sure you have a game plan to make some money tomorrow. We're going to cover all the details tonight. Before we jump in, though, and get this game going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in tonight. If you enjoyed the video, hit that like button. Give me a shout out in the comment section below. Thank you so much for sticking around tonight and tuning in and supporting this YouTube channel. But enough of the intro, Joe. Tuesday is not going to trade itself. We got a lot of good trades setting up here for tomorrow. So where are the best money-making opportunities here? Well, I'll tell you, everything's pretty bullish overall. The S&P is pretty straightforward. Bull market into a trading range. I've got some great bear traps and breakouts on my radar on the S&P. S&P got a pretty straightforward game plan for tomorrow. Nasdaq, not so much. We're gonna go a little bit deeper into the details tonight on the Nasdaq. A little bit of a confusing chart on the Nasdaq tonight. Still kind of reeling after that SVB collapse a few weeks ago, but I got a pretty simple game plan. I think by the time we're done tonight, even though it's a little more complicated than the Nasdaq, you have a pretty simple game plan to make some moolah on Tuesday. Oil's pretty simple, right? Nice, big, strong run higher. There are three, we're looking for pullbacks, right? There are three, maybe four, I'll give you a bonus, three, maybe four different ways to time a really good entry on oil for tomorrow. We'll definitely talk a lot more about oil tonight. A lot going on in the oil markets with some refineries going down here in the Southwest. So we got a lot to cover, right? A lot of great trades for Tuesday. Before we jump in, though, and go over each of these charts, my favorite trades for tomorrow, why don't we take a look quickly here at the news for tomorrow? There really isn't any major economic news until we see GDP and the personal income numbers coming out on Thursday and Friday. We've also got the end of the month of March. Remember, the end of the month is usually going to be a little bit of an uptick in volatility. The big stuff tomorrow really is that announcement from Michael Barr. He, of course, is the vice chair of supervision at the Fed. I assume most people, and I assume the reason why markets were a bit slow here today was because I'm assuming people are waiting to hear from the Fed what their opinion of this banking. It's not much of a crisis, right? And in fact, we'll probably hear tomorrow. I assume tomorrow Michael Barr will tell us that, bank management, poorly run investments, all the stuff you've heard about in the news media. I assume we'll say more of that here tomorrow, but I would imagine that is potentially the big market catalyst here for tomorrow. He's back on the mic on Wednesday. Remember, though, if there's one thing you take away from this kind of section of the video here tonight, don't worry about what he says tomorrow. Remember, the news is noise. All we need to do is know when he speaks, and then we'll trade the reaction to his speech, his testimony tomorrow in our trade. Remember, the what he's saying doesn't really matter, right? All we care about is how the markets react to it. So we'll go back to our charts, but keep in mind that 10 o'clock, kind of top of the hour, we call it the 10 o'clock shock in our trade room. Be aware of that time tomorrow morning, and of course, we'll trade the reaction tomorrow in our trade room. Now, guys, back to our charts, because again, the news is noise. They're great catalysts, but this is where we make our money on the charts here for tomorrow. And of course, I'm going to cover all my favorite trades on each of these charts. If you like making money, guys, I would make sure you watch all the way to the end of this video, because every trade I talk about tonight can be applied to your favorite market. So grab some notes, take some screenshots. We're going to go S&P first. We'll go Nasdaq. We'll wrap things up here on the mighty crude oil. A couple things before we jump in. This is a tick chart, first of all. This is an 8,000 tick chart. Volume was a bit lower than average here today. I'll bump down the time frame during low volume times like this. They're all tick charts. This is the 21 EMA, so be aware of that. All the charts have a 21 EMA. And down in the description of the YouTube video here tonight, I've got some brand new updated higher time frames for you guys. I got some 60-minute charts linked up in the description. And I like to use 60-minute time frames to give me an understanding of directional bias, momentum direction, big turning points on the chart. It'll be a great companion to the chart in front of me. Those links in the description on the 60-minute time frame. So keep that in mind if you want to learn more down in the description. Now, what's the most important thing affecting this market right now? As I mentioned in the kind of the introduction sequence, this is a pretty straightforward market. It's a bull market right now, not just in the short term, but also in the 60-minute time frame as well. The Nasdaq is very, very bullish on the 60-minute. But in a nutshell, this is a bull market into a trading range. That's pretty much all this is. If you are with me in my trade room, we open up every morning, 8 o'clock Eastern time. These are very common. We call these directional ranges. And whenever I see a directional range, we know that momentum is very bullish. So I've got really two kind of core ways to make money in a situation like this. One is a bear trap. Would love to get some bears taking a breakout, going lower, getting trapped in. And then remember, with a range is a magnet. And so because of the overall momentum being bullish, I'd love to use like their stops, right? We can use one of my failure patterns to buy off of this low. That's one of my favorite trades here for tomorrow. Now, be aware, there's a couple variations of this general idea. We're going to talk about those variations because, you know, they're not always this clean, easy setup, right? So we'll talk about some variations of that as we go into the video here tonight. The second kind of way you want to trade something like this is a breakout. Now, breakouts can be tricky because we don't want to buy high. We're already very bullish, so I like the idea of a breakout, but there are really kind of three different kind of components that you want to be aware of on a breakout, and we're going to talk about that tonight as well. The buyers, of course, in the S&P, they love to break this thing higher and take out this 40, 73 and 3/4. And again, you'll see why I say that if you go check out those 60-minute time frames linked up in the description. So we have a little bit to talk about here on the S&P. Be aware, it is quite different on the Nasdaq right now. We don't always see such different types of charts between the S&P and the Nasdaq, but you'll see tonight the S&P and Nasdaq are pretty different. So you'll want to make sure you watch both of those here for tonight. I want to cover the bear trap a bit later in the video. I'm going to tie it together with the Nasdaq. So we'll talk about this. And again, there are three really kind of key ways to trade that bear trap down there. So we'll talk about more about that in a moment. Let's talk about breakouts going higher. Okay, when it comes to bull breakouts, the key is, and we talk about this a lot on these videos, is as we're going higher, you have to anticipate that bears are going to come in and try to short this thing, right? Because you get resistance overhead. And so the way you make money in the short term as we're going higher is with what we call a bear trap, just like you guys are learning in my free trading course, right? So trap patterns. So as we're going higher, you want to be thinking about traps, right? You want to literally try to trap in those bears and use, right, and literally use that same trap setup that I talk about in our free trading course. Now, as we get a bit higher, we don't want to buy high, right? We want to buy low. So as we get higher, then we start thinking about, okay, let's go out and find bigger channels, draw off the high, down to that low. And, you know, we don't want to buy high, right? We want to buy low. So what I'd love to do is after we get to a certain point up here, then start waiting for a pullback. And once we get that pullback, this is one of my favorite kind of classic seller failure pattern, just so you guys are learning in the free trading course. So we're getting high up, right? We're getting high up in the chart. We don't want to buy too high. We're getting closer to the big objective. We don't want to buy into that area, right? So price will oftentimes pull back. And once it does, and we start seeing the bears come in and try to short this thing going lower, this is exactly where you can use what I call a failure into pullback combination. And we talk a lot about this, of course, in that free trading video series on our website, right? So failure into that first pullback could also be a strength trade coming off of that low. So this is the general idea if we get this thing to go higher here, because of course nobody knows what direction we're going to go. So if we do go higher, I'm not in the business of making predictions. My job is to make sure we have a game plan. That way, no matter what happens tomorrow, we have a game plan ready to make some money no matter what. So again, think about trap patterns, right? Think about, again, these would be bear traps or trap lows as we try to make that run. You want to buy as low as you can, but again, anticipate bears are coming in, trying to short off this high. And then as we start getting up a little bit higher here, maybe it's a measured move, breakout leg, measuring leg, right? So symmetrical measured move going higher. We'll know more of this tomorrow once we see each other in the morning trade room. Get underneath that 21 moving average, trap in some of those sellers, right? Remember, when that happens, remember, momentum very strong, right? All that bullish momentum now. If we can get the sellers pinned below that 21 moving average, we can then use their stops as fuel, right? As a catalyst to punch this thing going higher. And ideally, you want to grab that first pullback off the moving average. We talk a lot about this stuff, right, in the free trading course. And again, I like to use that 40.73 3/4 up there. Now, we may end up going sideways in a new range up there as well tomorrow if we were to really rush and go higher. So we'll talk about ranges here as we go here. The other kind of variation of this that you want to be aware of is sometimes, there's a lot going on right now with the banking situation. We're going to hear from the Fed bar tomorrow. So, there's always potential this market may just punch and just rip, right? So there's a couple of variations of this. One variation, again, is, one variation I want to keep in mind would be, is if we do pop up and begin to kind of flutter, and you know what I mean? Maybe we don't get that trap. Maybe it pops up and begins to grind and grind and grind. We call these pop and grind channels in our trade room. They're very simple. Mark a trend line off the high, right? Bring a channel down off the low. And what I always do is I go in here, find some prior swings, and I always want to get that first test, right? So as they pull back, this could be a trap pattern like I'm showing you here. It could be a failure. It could be a pullback combo. These are all the same setups you guys are learning in that free trading course, which reminds me, I know that most of you guys have taken the free classes, right? You're learning all the setups. You're making money. I'm getting a lot of great emails from you guys making money on your own, all from that free trading course. So well done on that. But if you're here watching for the first time right now, if you haven't learn these entry tactics like the bear traps, the failures, the combination setups, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take my free trading course, because the strategy you'll learn in that free video series will teach you a really simple trick to know exactly where the best winning trades are going to be that day. And I'll teach my 4 favorite entry patterns to help kickstart you making money on your own account. If you're missing the best trades each day, if you're taking too many losses, if you're not getting the results you want, definitely grab that link that popped up. Take that free course. It is perfect for someone who's trying to make a full-time career out of the wonderful business of day trading. But now you kind of know, right? So again, grab that link up there and you'll learn all about the entry tactics. I'm talking about lots of examples of that in that free trading course. But now you know, right? As we run higher, think about traps, right? As we go higher, as we get up too high, and we'll kind of define what too high means tomorrow morning, we begin looking for larger channels, deeper pullbacks. We're not buying too high, and then with that pullback, trapping in those bears and hitting those stops, right, for fuel, right, to run this thing going higher. That's a sequence I'm looking forward. I'll keep an eye on that pop and grind and see if we get one of those channels as well. Remember, very bullish overall, right? We're bullish overall. So trying to short this How would you short off the high here? You know, maybe all we get is a retest of this high. How would you short off this thing? It's a little bit tricky to short this thing because, again, you're bullish in the short term, you're bullish in the long term on the 60-minute chart right now. The Nasdaq's very bullish right now, so it's not easy to want to short this. The only way to really do it is with what I call a crown reversal pattern. What's that look like? Well, there's one right there, actually. As we go back up and retest the high, right? You want to do it right at the high. Now let's see if buyers come in and see if they struggle to keep going through the high. If they try once and they try twice, I can now look for, again, we call these crown reversals. They're ultimately trapping the buyers in, buying into these highs, right? I don't want to buy the high up there. I want to buy low. And don't forget, we're going to talk about buying low in a moment here. So give me a few seconds here to finish this thought. But if I can get the buyers trying once, the buyers trying twice, think about where their stops are. Think about where their pain is as I teach it, and look for a way to sell right into their pain, right into their stop losses. That's the only real safe way to short this in a bull market with a bull range like this, is to literally trap in those buyers who are caught buying too high and use their stops as the catalyst for that reversal, because momentum is too bullish right now. We have to get some other way to turn and roll this thing over off the high. Where do you think the bears want to go at that point? They're going to want to go out and take out this low, take out this low. And then keep in mind, too, we may have a lot of buyers waiting down there to buy, right? To buy off of that low. In fact, why don't we talk about how to buy off of that low? Because like I said, one of our favorite trades in a directional range like this is buying those bear trap kind of breakouts if we get that pullback. Let's keep going to the Nasdaq here right now, and we'll talk about this on the Nasdaq. Now, I kind of warned you guys earlier. The E-mini's pretty straightforward. It's a bull market into a trading range. The Nasdaq's going to be a little more advanced, and the reason why I say that is, and again, I would definitely encourage you, look at the 60-minute chart I have linked up in the description of the video tonight, and you'll see it's very difficult to call the Nasdaq a bear market, right? It just looks a bit confused right now, is what it looks like at this point. So the key component here right now is it's a bullish move into a trading range, but look what happened. They really broke down today into a new trading range. This now is basically a bearish directional range. And what do we just talk about when it comes to directional ranges? We know that range acts like a magnet. Now, there are two basic ways to trade this. And the first one is my favorite trade for tomorrow. My favorite trade in the Nasdaq for tomorrow would be, I'd love to get, if you understand how ranges work, and we talk a lot about this in the free trading course, bear market there into a trading range, we pop up, and now we're kind of trying to rotate down, right? They're kind of rotating. We call this rotation off the high, right? They're rotating down off the high, and the bears are ultimately trying to complete what we call a pendulum swing. Okay, the amount we go above the range is the amount we go below the range, right? So the bears are only trying to take out that 12,708 area, right? 12,710 area down there. This is where I believe the best buying opportunities are likely going to be here on the Nasdaq. And again, a lot of that is because, maybe you're wondering right now, well, why not sell that? Isn't that pretty bearish? Yeah, on this chart it is. But when you go to the 60-minute time frame, you'll see you're kind of walking right into what is probably just a perfect spot for buyers to re-enter the market for tomorrow. So one of my favorite trades is I'd love to get like a bear trap breakout down here, use the bear stops as fuel, trap in those bears a bit, right, and then buy back up. That's one of my favorite trades on the Nasdaq. It can also be applied on the S&P as well. And as I mentioned, there are probably 3 different variations of that setup that I want to go over with you guys here right now, because again, I'd love to think we're going to get some picture perfect textbook entry pattern, but I want to make sure you guys are ready no matter what these wild markets throw at us. The next scenario, which is by far the most difficult one, is if we don't get that rotation off the high and the buy low. If we begin to run higher. Now, here's where things get kind of complicated, right? Because again, it's a bull market into a trading range. So we know the buyers would love to go back into that trading range. Ideally, they'd love to go back up and take out that 12,984 half level. That kind of is the big objective right now on the NASDAQ until we make our way up to that 13,082 area up overhead. The challenge is going to be is that as we go higher, remember, it's a long-term bull market, but it's quite bearish here in the short term. We have to assume there are going to be sellers, because oftentimes what happens is when you get a range, you'll oftentimes have a breakout that'll pull back and try to hold the underbelly of that range, right? Kind of like a breakout pullback. It happens on both bull ranges and bear ranges. So we have to be concerned that if we end up grinding higher here, we may be running right into some bears trying to use the kind of the underbelly of that range as resistance with the goal of going back into the new range. The easy rule of thumb is the most recent range is usually the one that means the most, because recency is very important. So what do you think is the best way to make money? I'd like to be a buyer going higher, but I'm worried about who? I'm worried about the sellers coming in and shorting somewhere ultimately, in this area right here. And this is exactly the situation where you want to be looking for a bear trap, right? So as we go higher, it's very similar to the game plan we just talked about on the S&P. If we end up running higher, I want to get in, but I want to get in by trapping in. Again, let the bears try to get short a couple times. If I can get a nice, again, this would be a trap entry like you guys are learning in that free trading course. I'd like to trap in those bears, right? And basically use their stops as the catalyst going higher. Now, this is where things get a little more difficult as well, because if we find ourselves up around these highs, the last thing I'm going to do is buy high up here. So this is what we want to think about. Okay, so as we go higher, we're very bullish. I like momentum is good, right? That is all good. The hard part, though, is location. I'm always trying to tell my students in our trade room, you want to be asking yourself these two questions. How is momentum and how is location? Ideally, the answers to these two questions or these two variables will help you find the best entry technique. So, for example, in this example, if we go higher here, momentum will be great, but location's not that great. So, like I mentioned on the S&P, as we start getting up higher and we start worrying about being too high, now I want to wait for a pullback and I'll look for those larger channels. And this is where this will be a little bit different here on the NASDAQ than the S&P, because we still have to worry about that overhead here, right? So if we do go higher here on the NASDAQ, same idea, bear trap entries as we go higher, but watch a bit closer here, a little bit different here in the NASDAQ. If I get that pullback now, remember, I'm still quite concerned about location, right into the high. I'm anticipating bears may come in and again try to short off this high here. So let me try twice. This is a great example of where we want to be a little more conservative on the entry. Let the bears kind of wrap that noose around their neck and use their stops as fuel. We call these two-try failures. They're basically just a more conservative, more patient version of the one-try failure that we talked about earlier, right? But it's a two-try failure. It's the same principle, though. Again, I want to buy nice and low to avoid buying too high. And momentum is great, but location isn't that great. So this is the game plan if we end up going higher here, right? Really important that we get, again, bear traps going higher. Remember, we don't want to buy high at all. We want to buy as low as we can. And trap patterns, by definition, are going to be the easiest way to buy nice and low there. Be very careful, though, of kind of that V-top and back down again, right? Which is not an easy place to want to short either. Not very easy there to sell this thing as we go higher, because you have that range waiting up overhead. So that's one kind of key, again, not a big difference, but a relatively small difference there on the NASDAQ. And again, the NASDAQ's pretty simple in terms of we know where the market wants to go. It's just a matter of getting in with some trap entries on the way higher and then waiting for those deeper pullbacks and using a 2-try failure, right, to rope in those bears and use those stops. This is one of the more challenging environments because, again, you're overall bullish, but that short-term range down there really throws a big question mark as we go higher. Now, let's talk about the buying as we go lower, because this is ultimately the best way to trade this thing for tomorrow, and it will also apply to the S&P as well. So if we get up going lower here, let's go back and ask those two questions once again. How is my momentum and how is my location? And this is going to help us kind of anticipate how to time the entry properly. So first of all, how is location? Location is fantastic down here. We're at support, below a range. Again, if you go into the 60-minute time frame linked up in the description of the video tonight, you'll see right away. This is a beautiful spot. And remember, it could be here, it could be here. I have a number of levels listed in the 60-minute time frame. You'll see there pretty easily. So I'll tell you, location is perfect down there. But what about momentum? Does that look like a very bull market at that point? No, it's a very bearish short-term trend. Momentum is very bearish at that point. So if momentum is a challenge, but I'm at a good location, it's very difficult in these scenarios to simply go out and pick the bottom, because oftentimes all of that momentum for the bears will carry this market lower. So trying to pick the bottom on this can be very difficult. The best way that I know how to do it is not to pick anything at all. Just simply wait for the bears to get caught shorting into this area and use their stops as fuel. Here are 3 ways you want to watch to do this now. As we go lower, again, it could easily keep on grinding down and then popping back up. So what I'm going to do is don't pick the bottom here. Let the bears try a couple times. Let them try once. Let them try twice. That range above us is the magnet. We're overall bullish, just not very bullish in the short term. Now use their stop loss with a classic 2-try failure pattern. Why 2 tries, by the way? Why 2 tries? Because of the momentum. You know, we want to let them try a couple times because we're gonna need them, right? We need those sellers to get trapped. We need their stops to act as fuel. That's the best way to pick that bottom. And the good news is we can get that bottom picked with a 2-try failure. Now it's pretty simple. Now we know where the market wants to go, right? Quick 1-to-1 target. Leave a runner back up to that 868. That could be a very, very profitable trade there coming off of that low, and easily my favorite here for tomorrow. I would also keep in mind out for a possible double bottom reversal. Again, lot of short-term bear momentum. If we go lower here, the bears could easily come in, pull back, and retest that low again. And it's very bearish here in the short term. These are actually even better to be a buyer because now the bears have effectively accomplished their objective. We expect with the bears coming down, we expect they're going to want to retest that low. Let them retest the low. It only makes our job easier because now professionals are already in, right? But the pros are selling high. Now let's rope in some rookies. Let the bears come in. Let the rookie bears, right? How do I know they're rookies? Because no professionals would ever sell into that double bottom, right? That's not what pros do. They sell high. They don't sell low. Rookies will chase this thing going lower out of FOMO. We've all been there before. I was there too over 15 years ago when I was a new trader as well, right? You missed a good entry. You don't want to miss the whole entire move. You're convinced we're going to keep going lower and you get trapped in, you get roped in just in time to see the thing spike back against you. So this is again, 2-try failure here because of that short-term momentum. And remember, the long-term momentum is the reason why I'm not trying to sell here. I'm not going to sell this because we're too bullish on the 60-minute. Once those bears get trapped in, we can use their stops as fuel, and then watch closely here because this is a great add-on after this 2-try failure. If it does pop up, now, again, where does the market want to go? It wants to take out that high, right? Markets want to rotate from one extreme to the next. So if we know where the market wants to go next, now we can go out. We can find a trend line off the high, find a channel off the low. And what did we say earlier? First test is the best test, right? I want that first test. Now, of course, I'm keeping it simple right now. It could be a bear trap, like I'm showing you right here. It could be a seller failure pattern, get below the moving average, trapping the bears. So trap, failure, pullback, strength trade. Again, we see a lot of these double bottoms. Trap, again, trap in the rookies. again, and then use stops for fuel. That could be a great setup as well. The last kind of option here, or the last variation of buying that bear trap, is a V bottom. When you see that 60-minute time frame, you'll see there could easily be a lot of buyers down here. What if all we get is a shot lower and we don't get any 2 tries and back up, right? What if all we get is a V bottom off of that low? What do you do in that situation? Because again, you don't want to pick the bottom, right? It's difficult to pick a bottom with all of this bear momentum right now, and I don't want to chase it going higher. Because again, remember, momentum and location. Location's horrible at that point. The way you trade a V bottom is you don't pick the bottom. You wait for the V bottom. You let it start to grind going higher here. We already know why it's V bottoming, right? We know why. It's a big bull market overall on the 60-minute. And once it V bottoms off that low, and again, I know it's difficult because every ounce of restraint is required not to buy. What we want to do is go up, find that channel high, bring it down off that low, and then go out and grab, again, first test, the best test. Makes sense, right? With the first pullback off the low of this channel. And really your goal at this point is you want to get into that first pullback before we go back up and retest those highs. I would love to see some sort of bear trap below a prior swing in off the low of that channel. That would really be a great trade as well. Not my favorite, because obviously we're buying a bit higher than trapping in at the lows, but sometimes that's all we get. All right, guys? So keep an eye on that. And of course, the final question I'm sure out there is, what if we break down? What if we hold the pullback and we simply blast, right? What if all hell breaks loose and we break down and reverse going lower? Well, that's, of course, more advanced topics. We'll talk more about reversals and significant reversals tomorrow in our trade room. It would take a pretty substantial move lower here to break that 60-minute bull bias here. So I'm going to keep looking for those bear traps below the low of that range here. And let's hope we get that bear trap breakout going below that range here tomorrow morning. Looking good on the NASDAQ. Let's wrap things up here now. On the oil, oil is pretty straightforward right now. It's an overall bull market. Again, on the 60-minute time frame, you'll see linked up in the description of the video tonight. And we also have this very convincing, very large move going higher. Now, we talk about, right, those two key components, right? How is momentum and how is location? Momentum is gorgeous. We can easily see, there's no question about momentum. Momentum is very, very strong. Anytime we see a strong move like this, we expect a pullback and a retest of that high. Strong moves are one of the easiest ways to make money. The hard part is staying patient for that deep pullback and buying that deep pullback. What's the problem though? Is location. We're so high up on the chart. The market made this huge move after Friday's relief rally off that low. And so the location is the problem. We're very, very high right now. I want to buy low, right? I want to buy way up here. So whenever I see a really big move like this, I always think about three different types of pullbacks. One is a shallow pullback. Now, shallow pullbacks are fine, but what's the challenge of shallow pullback? What's the problem? Location, right? We're not going to get that deep pullback. Remember, deep pullbacks are great because you can risk small to get a big reward, right? Small risk, big reward. That's the dream scenario. So a shallow, now why would there be a shallow pullback? Well, you've got, as you can see here, prior highs might come in as support. There was some refinery issues across the Southwest, which is what caused this thing to continue spiking higher here today. We may not get that deep pullback. So what do you do in a situation with a shallow pullback? You have to buy as low as you can buy, okay? And to do that, you got it. Bear traps, right? I said it earlier. Bear traps and breakouts are going to be the keys for tomorrow. We want to buy as low as we can. And so whenever we have a big move, and you can kind of make notes on this, whenever there's a big move in one direction, we know they want to pull back and retest the high. If all we get is a shallow pullback, it's a trap. Traps are always going to be the best bet whenever you're worried about buying too high, like a shallow pullback after a big move. The easier trade is a modest pullback. Now, what's a modest pullback look like? It looks like this was a range coming out of last, late Wednesday, early Thursday. I would love to see us pull back a bit deeper Okay, now we're not so worried about buying too high now. Let's try to rope in some of these bears now, right? Hopefully that relatively deep pullback will confuse some rookies. The sellers will come in. They'll try to short this thing. Remember, it's a heck of a move higher. We know they want to go back to retest the high unless something really crazy happens overnight. If those bears come in and buy that relatively shallow pullback, I can simply use their stops as fuel for one of those classic failure into pullback combinations. Target, of course, is back up to retest the high. So shallow pullback traps are your go-to. Modest pullback is a failure into pullback combination. Again, this should all make sense here if you're taking that free trading course, right? We talk a lot about these in that free video series. And the final one is really what you want, right? You want a deep pullback. I like to use what I call these measured pullbacks, where I can take that last strong shot lower, measure it off that high. This would be the kind of the dream come true here for the buyers. Get down around that $70 a barrel, if you will, give or take, right? In this area, I get that channel come off the highs, right? This would be a great place to be a buyer. But what's the problem with that? Well, remember, think about it. Those two questions again. How is location? If I buy down here, location's pretty good, right? You're buying nice and low. But if we end up going all the way down, right, almost $3 off the high, how is momentum? Momentum is going to be, pretty bearish at that point. So what do we do? If I want to pick a bottom on this, well, if I don't want to risk picking a bottom, if I want to time a good entry, even though I have a really deep pullback, what do? I have to, because momentum is not as strong anymore, we need some other catalyst, right? We need some other fuel to turn this thing around. And the easiest fuel you're going to find, guys, is a stop run. Absolutely. This is exactly the situation where we use what we call a two-try failure, right? I'm using stops as fuel. Let them try once. Let them try twice and light those stops up. Again, it's such a deep pullback at that point. You have to give the bears the benefit of the doubt. The reason why I'm not trying to sell that is because the overall bull bias, right? The reason why I wait for two tries is because of that short-term momentum for the bears. Momentum and market location are the key to timing the perfect entries and getting that consistency that we all want here, right? Hit their pain points and buy that failure. Now, hold on here, because this is also another variation. Oftentimes, those deep pullbacks, we're not going to get that up, back, and go, right? That failure into pullback combination. A lot of times what happens is because there's so many bears that are caught trapped, the market now will oftentimes flutter, a short squeeze. And what do we do in that scenario? What am I worried about? I'm worried about buying too high, right? What's the pattern you use? What's the entry setup when you're worried about buying too high? Traps, baby. And that's exactly what usually happens after a deep pullback that again, that fools the bears. The bears get their stops run, right? They get their bell rung and the market runs higher. As it runs higher, bear trap, baby. Why bear trap? Because again, momentum is good at that point. We've turned the momentum over now, but now location is the challenge. All right. So shallow pullback trap, modest pullback failure, deep pullback, two-try failure, right? And then if we happen to get like that V bottom, we're at V bottoms, right, and grinds back up, you know how to do this now, right? We just simply don't chase after it. We go out, find those new channels, grab those traps. It's the same basic principle, right? We're going to buy as low as we can off the low of that channel. Now, there's a lot of variations of what I just taught you, right? Those three are the core principles. So, for example, we might go sideways up here. If we go sideways, ranges are very common whenever we have a big move like this, right? The market almost has to tread water for a while. But the same principles apply. Shallow pullback, trap. Modest pullback, failure. Deep pullback, two-try, back up. So same basic idea. Also, too, if we keep on grinding higher, if we grind higher, shallow pullback, trap, modest pullback, failure. We'll obviously do more analysis tomorrow, but if it keeps on grinding higher, nothing changes. Okay, we still have those three key kind of core components if we go higher here. Where do the bulls want to go right now? Well, you'll see on the 60-minute time frame, it looks like, I hate to say it, but $77 a barrel in this area right here. You'll see on the 60-minute that 76.41 to 77.62, right around $77 a barrel, right when it felt like we were back in the 60s for a while there. Wah, wah, wah. I know. That's the way the world is at this point. But again, right, don't worry about the why. Okay, it doesn't matter why we're moving like this. Worry about what is happening, what is momentum, what is my location, and hopefully that will give you kind of some core principles to trade off tomorrow. And obviously we'll do it together tomorrow morning in our trade room. No matter what the scenario we get for tomorrow, we'll do it together tomorrow at 8 o'clock Eastern time. All right, that is the oil. Oil's ready, Nasdaq's ready, S&P's ready. How about you? Are you ready for tomorrow as well? Now don't forget, I've got a lot more information for you guys in the description of the video tonight. All the charts, all the free course, all the free trading class links, all the membership links. Come out and join us as a member of our trade room each morning. I'll put all those details in the description of the YouTube video here tonight. If you have any questions, if you need any help along the way, please don't be afraid to call the office or send me an email. The easiest way to get help with any information we've talked about tonight is to pick up the phone, call the office, use live chat on the website there. So we're always here to help out if you need help along the way. Hopefully, though, you learned a bunch tonight. Hopefully, you use this strategy, this game plan to make a bunch tomorrow. Hopefully, I'll see you tomorrow morning or at least sometime this week in our morning trade room at 8 o'clock Eastern time. In the meantime, let's get out of here. Have a great evening out there. We'll see you tomorrow morning. Opening bell, 8 o'clock Eastern time in the trade room. If not, same time, same place. We'll do it all again tomorrow night. Get ready for a big Wednesday trading session in tomorrow night's video. All right, guys, as always, my name is Joseph. Thank you so much for tuning in tonight. Thank you so much for watching all the way to the end. Now get out of here. Be well. Be nice to each other out there. And be here next time. Adios, amigos. Bye-bye for now.